Hey, Matt Decker here with Leverage Wealth Management. Hope you're doing well today. I'm putting together this really short video, and I want you to think of it as almost like a cheat sheet type video. And the reason I'm doing this is because I get inundated with emails on a daily basis of people that are looking at their policies and worried about whether or not they were designed the right way, whether or not they are structured for maximum tax-free retirement income. And so what I thought I'd do is just put something together for you real quick so that you can, on your own, pull up the illustration that was given to you when the policy was sold. You could probably even do this on an annual statement, though what I'm going to show you might be a little bit harder to find if you're looking at an annual statement. But certainly, any illustration that you've received from your current agent, you'll be able to pull this up, and within a minute or two, you'll know whether or not you have a policy that's designed for maximum income in retirement. And so I'm going to show you how to do that, and I'm going to show you on 4 different policies because it's basically the same no matter what carrier you're looking at, and it's really simple. So here we go. All you're going to do is you're going to pull up your illustration, and you're just going to click on Control F. So Control F is going to bring up your find key, and what I want you to search for on your illustration, we're going to look at 2 things. The first thing that I want you to search for is what's called the 7-pay number. So all you're going to do is you're going to type in 7-pay. So 7-pay, you're going to hit enter, and it's going to find, okay, so there's the first find, 7-pay, and when it finds one, you're going to look and see if there's an actual number in there for the 7-pay. So I've already read this paragraph, and I know that there's actually no number in there. This is just the definition of what the 7-pay is. So I'm going to hit enter again. That's not it. Hit it again. Okay, there we are. We got a number. So what this is telling me is that the MEC limit on this policy, meaning the most money that you can put into this policy and the IRS still give it all the favorable tax treatment that we know and love, the most that you can put in is $1.7 million a year. Okay, so that's the 7-pay number. I'm going to show you one more. Obviously, this is a huge policy. I'm going to show you another policy here. This is Transamerica. We're going to do the same thing. So you're going to type in 7-pay. You're going to hit find, and you can see it's kind of all over here. In this one, it's buried in the middle of a paragraph. It's our understanding that the 7-pay limit for the first 7 years is $6,810. Okay, so the 7-pay on this policy is $6,800. You can't pay any more than $6,800 into this policy, and the IRS still give it all those favorable tax treatments. Okay, we're going to look at another one here. This is North American. We're going to do the exact same thing. 7-pay. And it's actually not in this one. Okay, so let's try this one. Guideline. Guideline premium test. Maximum guideline premium. Here it is. Okay. Maximum guideline premium. And I know that it's buried somewhere in this paragraph. And it looks like here it is. The initial guideline annual premium is $20,000. So the most that you can pay into this contract every single year, $20,908, and it still retain all of its tax benefits. Okay, so you'll notice the first 2, we had to search for 7-pay. On North American, we searched for 7-pay, couldn't find it, but we could find guideline, maximum guideline premium. Okay, so we searched for guideline and we found it that way. Let's look at one more. And let's try 7-pay. Okay, so there's 7-pay, but it looks like it's just a paragraph that tells me what that means. We're going to keep going. There's 7-pay. Again, that's just more definitions. And here it is. 7-pay premium limitation. Policy has a 7-pay premium limitation, and it looks like your 7-pay annual premium is $8,661. Okay, so that's the first thing you need to do. Pull up your illustration, Control F. You're going to search for 7-pay first. You're probably going to find it under 7-pay. If you can't find 7-pay, you're going to search for guideline annual or guideline, and you'll find it that way. Don't get confused by the guideline single premium. That's something totally different. You're looking for guideline annual or 7-pay. The next thing that you're going to do after you write down that number, what that number is, you're going to search for death benefit option. Okay, so death benefit option, I searched for it. Here it came up and it said A level. Okay, we're going to try it again over here on North American. Death benefit option. Now you can see this one here has a paragraph right here that tells us we're using the increasing death benefit. Okay, that's option B. We're going to try it again on Transamerica. death benefit option. Initial death benefit option level, okay? So that's an A. A is level, B is increasing. We're going to try to get on LSW. Death benefit option, B increasing. Okay, so you'll notice that on death benefit option, I was pretty much 4 for 4. I found it really easily. So the things that you're going to want to write down, number one, you're going to write down what the 7-pay number is. Okay. The second thing you're going to write down is the death benefit option that your policy has. And here's how you know if you have a policy that's designed for maximum income in retirement. Now, this doesn't work 100% of the time, but 9 times out of 10, this is going to tell you really well if you have something that's designed for maximum income. Your policy should be an option B death benefit, and your premium that you're paying should be as close as possible to the 7-pay or the guideline annual number that you wrote down. I'll say it again. If your policy is designed for maximum income in retirement, if the goal of the policy is to kick out maximum income in retirement, you should have a death benefit option B or increasing. That's the same thing. B or increasing. And the premium that you're paying should be as close as possible to the 7-pay number. So actually this LSW policy is a really good example. You'll notice here, death benefit option B increasing. The initial premium is $1.6 million and the 7-pay premium is $1.7 million. So that tells you that you're paying really close to that 7-pay premium and you have an option B death benefit. This policy is really close to as efficient as it can get, okay? It's about as efficient as it can get. Now, this is a huge policy. This is a $26 million policy for a male 55 years old. So obviously they've got a lot of money. They're paying a lot of premium here. But the point is, to understand whether or not you have a policy that was designed the right way out of the gate, you should have an option B increasing death benefit, and you should be paying as close to the 7-pay number as you possibly can. What I see all too often is policies that are written with an A level death benefit option, and when you look at the 7-pay number, you'll notice that it's maybe 2 to 3 times higher than the premium that you're actually paying. In those cases, the policy was actually designed for maximum commissions for the agent. It was not designed for maximum income in retirement for you. So that's the key distinction there. That's just an easy way to see if you've got a policy that was maximum funded. It doesn't matter what product you're using. It doesn't matter what carrier you're using. Those two things are constants throughout just about every carrier that you could work with. And it all comes down to how much fees you're paying and how much commission the policy is generating for the agent. If it's an A level and you're paying way less than the 7-pay number, then that policy was designed for maximum commissions. It was not designed for maximum income. And if you actually ran a policy designed for maximum income using the same premium that you're paying, the income would be significantly higher for you in retirement. So if you have any questions, if you want me to look at a specific policy, if you think that yours was done wrong, or you've gone through this exercise and you've done your Control F, you've searched for 7-pay, you've searched for death benefit option, maybe you're having trouble finding it, maybe the numbers or what you're finding isn't quite making sense, you can always contact me at the website leveragewm.com/contact-us. You can fill out the form, it'll go right to my email, or you can just email me personally and directly, matt@leveragewm.com. You can always drop a comment below. I'm happy to help with anything that I can. If you haven't done so already, please like and subscribe to this video. It's important to get this word out because the last thing that we want is people hating life insurance because they have a policy that was designed the wrong way by an agent who got greedy. This has been Matt Decker. Hope that you found this educational and helpful, and I look forward to talking to you soon. Take care.